What if I told you the world's biggest banks are laundering trillions in dirty money? Drug cartels, dictators, terrorists, they all use the same global financial system. HSBC, the Panama Papers, shell companies. This isn't conspiracy, it's documented fact. So why are these banks too big to jail? And would nobody go to prison? This is the financial crime investigation they don't want you to see. How do offshore accounts actually work? How does money laundering happen? Today, I'm exposing the banking corruption that moves $2 trillion every year. White-collar crime at its worst. The Dirty Money documentary starts now. Stay until the end. The banking system truth will change how you see everything.
What if I told you that you laundered money today? Not intentionally, not knowingly, but you did. That credit card swipe this morning, your direct deposit, that stock you bought through your favorite app. Every single transaction passed through a system that washes trillions in dirty money every year, and you're part of it. We all are. Now, before you click away, this isn't conspiracy theory nonsense. What you're about to see is documented, proven, happening right now, in plain sight, with the full knowledge of governments, regulators, and the banks you trust with your savings. But here's what I can't tell you yet. I can't tell you how the machine actually works, not until you understand who built it and why. I can't show you the exposed documents, the trillion-dollar fines, the names you'll recognize, not until you see what connects them. And I definitely can't explain why nobody ever goes to jail until we trace this thing back to where it started. What I can tell you is this. By the end of this video, you'll understand something most people never figure out. You'll see the architecture, the design, and you'll finally have the answer to a question nobody in power wants you to ask. So let me ask you something first. Does it make sense that a regular person can face prison for failing to report a few $1,000s, while a multinational bank washes $200 billion for drug cartels and terrorists, and walks away with a fine that equals a few weeks of profit? If you've ever felt like the rules apply to some people but not others, like there are two sets of laws in this world, one for you, one for them, you're not paranoid. You're paying attention. Stay with me, because what comes next will change how you see every transaction you've ever made. Let's start where this whole thing began, almost 100 years ago with the mob. All right, quick pause. If you've made it this far, something about this is hitting home, and I want to hear from you. Drop a comment right now. What part of this resonated with you? The realization that your everyday transactions flow through the same system that washes cartel money? The two sets of rules? Or something personal? Your own experience with a system that feels rigged against regular people? Tell me below. I read every single one. And if this is the kind of content you want more of, investigations that pull back the curtain on how power and money actually work, hit like, subscribe, bell icon. You know the drill. Because what I'm about to show you next is where the real story begins. The origins, the blueprint, and the moment everything changed. Let's get back into it. Now here's where everything changes. To understand what's happening today, we need to go back, not to ancient history, but to the moment when organized crime handed Wall Street its most valuable playbook. 1920s Chicago. Prohibition. The American mafia had a problem. Bootlegging was generating mountains of cash, more money than anyone knew what to do with. But here's the thing. How do you spend millions when you can't explain where it came from? Their solution was brilliant. They bought cash-heavy businesses, laundromats, car washes, restaurants, places where it was impossible to track how many customers actually walked through the door. They mixed illegal earnings with legitimate revenue, reported inflated profits, paid taxes on the total, and suddenly, dirty money came out clean. This is where the term money laundering literally comes from. Born in the laundromats of Chicago, the word itself carries the fingerprints of its criminal origins. But here's what most people miss. The mob didn't just invent money laundering. They created a blueprint, a system that could be scaled, replicated, and industrialized. And that blueprint didn't stay buried in history books. Fast forward, 1970s, 1980s. Global trade is exploding. Financial markets are interconnecting. And banking regulations, they haven't caught up. This is when Wall Street learned its most dangerous lesson from the underworld. Money doesn't have a smell. A dollar earned from selling medicine looks exactly the same as a dollar earned from selling something far more dangerous. Once that revelation sinks in, everything breaks. Enter BCCI, the Bank of Credit and Commerce International. If you've never heard of it, you're not alone. This story has been systematically buried because it reveals too much. Founded in 1972, grew into one of the largest private banks in the world, operated in over 70 countries. On the surface, a legitimate institution serving developing nations. Behind the scenes, something else entirely. BCCI became the banker to the world's most dangerous people. Drug cartels, arms dealers, terrorist organizations, corrupt dictators. All of them found a home at BCCI. The bank laundered money from Manuel Noriega, the Panamanian dictator who was simultaneously on the CIA payroll and running cocaine through his country. It facilitated transactions for terrorist networks, helped despots hide stolen wealth, provided financial services to arms traffickers supplying weapons to war zones. And here's the part that should make your blood run cold. Regulators knew, intelligence agencies knew, governments knew. For nearly 2 decades, they let it continue. Why? Because BCCI wasn't just a rogue bank, it was useful. A shadow financial system for operations that couldn't go through official channels. Need to fund a covert war without congressional approval? BCCI could help. Need to move money to an ally who can't be publicly supported? BCCI was there. The bank existed in a gray zone where crime and statecraft overlapped, where the interests of criminals and governments occasionally aligned. When it finally collapsed in 1991, the largest banking scandal in history at the time, the full scope was quickly buried. Investigations limited. Prosecutions few. Uncomfortable questions quietly set aside. But the real legacy of BCCI isn't the scandal, it's the lesson that survived. Wall Street watched a bank openly service the world's worst actors for 20 years, with minimal consequences. They saw that penalties for facilitating crime, even on a massive scale, were manageable. They learned that being too big, too connected, too essential to fail also meant being too important to truly punish. And they absorbed the fundamental insight organized crime had discovered half a century earlier. Illegal money flows, just like legal money. With the right structures in place, no one has to ask where it came from. This is the mentality shift that transformed everything. The old model of banking, conservative, cautious, reputation above all, gave way to something hungrier. Growth at any cost, deposits from anywhere, operations in jurisdictions with weak oversight, competitive advantage by not asking questions that competitors were willing to ignore. What emerged wasn't a clean break from the past, it was a synthesis. The sophistication of modern banking merged with the ruthless pragmatism of organized crime. The result? The system we have today, where the largest financial institutions pay billions in fines for laundering money, and no senior executives go to prison, where banks write off penalties as a cost of doing business, where revelations keep coming, decade after decade, and nothing fundamentally changes. And this is just the foundation. Because what comes next shows how these exact patterns, the blueprint from Chicago, the lessons from BCCI, are still running through the veins of the biggest banks on earth, right now, today. Stay with me. So now that you understand where this all came from, here's the real question. How does it actually work? Because knowing history is one thing. Understanding the machinery, the actual system that transforms dirty money into clean wealth, that's where everything clicks. And once you see how elegant this process is, you'll never look at the financial world the same way again. The 3 phases. Modern money laundering operates in 3 distinct stages. Think of it like a factory assembly line, except instead of building cars, this machine takes money earned from the darkest corners of human activity and transforms it into wealth that buys penthouses in Manhattan, funds political campaigns, and acquires stakes in companies you interact with every day. Phase 1. Placement. Phase 2. Layering. Phase 3. Integration. Let me break each one down. Phase 1. Placement. This is where dirty money first touches the legitimate financial system. Here's the challenge. If you're running a cartel or trafficking operation, you're dealing with mountains of physical cash. You can't walk into a bank with duffel bags of $100 bills without raising red flags. So placement is about breaking that cash into manageable pieces and finding creative entry points. One technique is called smurfing. You hire dozens of people to make small deposits, always just under the reporting threshold, into multiple accounts across different banks. Each transaction looks innocent. Collectively, millions moving into the system. Another approach, shell companies, businesses that exist only on paper. No real operations, no real employees. These entities open bank accounts, receive payments for fake invoices, and suddenly, dirty cash has an origin story, a consulting contract, a real estate deal, a licensing agreement. Paper trail looks legitimate. Nothing real ever happened. But here's where it gets interesting. Placement has evolved far beyond bank deposits. Luxury real estate, you can buy a $30 million condo in cash through an anonymous LLC. Minimal questions asked. Art. The market is notoriously unregulated. Transactions are private. Prices are subjective. Buy a painting for $5 million, sell it for 10. Who's to say the appreciation wasn't legitimate? Crypto. Rapid value movement across borders. No traditional banking infrastructure required. Placement has never been easier, faster, or harder to detect. Phase 2. Layering. This is where transformation gets sophisticated. The goal is simple. Create so much distance and complexity between dirty money and its final destination that tracing it becomes practically impossible. Imagine money moving through 20 accounts in 15 countries, converted from dollars to euros to pounds to crypto and back, passing through banks in Switzerland, shells in the Cayman Islands, trusts in Delaware, investment vehicles in Singapore. At each step, the trail gets colder. Transactions look like normal business: wire transfers, investment purchases, loan repayments. By the time investigators try to piece it together, incomplete records across multiple jurisdictions, different privacy laws, different cooperation levels, different political motivations for looking the other way. This is where major banks earn their place in the machine. They provide the infrastructure, the global reach, the veneer of legitimacy. Danske Bank, Denmark's largest financial institution. Between 2007 and 2015, their tiny Estonian branch processed over 200 billion euros in suspicious transactions. Let that sink in. 200 billion. Not a rounding error, not an oversight. A deliberate business model, operating for nearly a decade before anyone officially noticed. HSBC. One of the world's largest banks. 2012. They paid a $1.9 billion fine for laundering money for Mexican drug cartels. Cartels responsible for tens of thousands of murders. And HSBC? They had specially designed teller windows, engineered to accommodate boxes precisely sized to fit through the openings. They didn't just know. They built infrastructure to process drug money more efficiently. The punishment? A fine amounting to about 5 weeks of profit. No criminal charges for executives. No one went to prison. Deutsche Bank, Germany's largest, connected to Russian oligarch schemes. Mirror trades moving billions out of Russia illegally. Suspicious transactions linked to Jeffrey Epstein. Extensive financial relationships with Donald Trump when no other major bank would touch him. A pattern of decisions suggesting an institution that repeatedly chose profit over ethics, viewing regulatory penalties as simply part of the cost structure. Do you see what's happening here? These aren't isolated incidents. This is how the system functions. Phase 3. Integration. This is where the magic trick completes. Money that began stained with blood and suffering emerges wearing a 3-piece suit and a Harvard MBA. Integration means reinserting clean money back into the legitimate economy in ways that seem completely normal. Returns on an investment portfolio. Profits from a business acquisition. A loan from an offshore entity. At this point, money has been so thoroughly processed it's indistinguishable from legitimate wealth. It can be spent openly, invested confidently, even taxed proudly, because declaring income provides yet another layer of legitimacy. The mentality required to build these systems is fascinating and disturbing in equal measure. This isn't impulsive crime. It's patient, systematic. It requires collaboration from lawyers, accountants, bankers, real estate professionals, people who either know exactly what they're enabling or have trained themselves never to ask questions. A culture where looking the other way isn't just tolerated, it's rewarded. And here's the uncomfortable truth we're building toward. This isn't a few bad actors exploiting loopholes. This is a structural feature of global finance, one that processes trillions of dollars annually. So deeply embedded that removing it would mean dismantling institutions governments consider too important to fail. What comes next reveals just how much dirty money flows through the system you and I depend on, every single day. If this is clicking, if you can now see the three phases everywhere you look, drop a comment. Placement, layering, integration. Let me know you're tracking, because what we uncover next goes even deeper. Now that you understand the machinery, the three phases that transform blood money into boardroom wealth, something probably started bothering you. A question sitting in the background of everything we've discussed. If we know how it works, if we can point to specific banks, specific transactions totaling hundreds of billions of dollars, why isn't anyone in prison? Why do the architects of these schemes walk free while the system they exploited continues operating without fundamental change? This is where it gets personal, because the answer exposes something deeply uncomfortable about how justice actually functions. The two-tiered system, let me frame this with a comparison that will crystallize the paradox immediately. If you're an average person and you fail to report a few $1,000s on your taxes, you can face criminal prosecution. You might lose your job, your reputation, potentially your freedom. The system treats you as a threat that must be contained. But if you're a bank executive overseeing a division that laundered billions for drug cartels and human traffickers, different rules entirely. Your institution pays a fine, issues a statement about improved compliance measures. Business continues. No handcuffs, no mugshot, no prison cell. The asymmetry tells us everything about whose interests the system truly protects. The math of impunity. Consider the numbers, because numbers reveal truth that rhetoric cannot hide. HSBC, 2012. They settled with the US government for laundering money linked to Mexican drug cartels and designated terrorist organizations. The fine? $1.9 billion. Headlines called it historic. Politicians declared victory. But let's look closer. At the time, HSBC was generating roughly $22 billion in annual profit. That massive, historic, unprecedented fine? 5 weeks of earnings. 5 weeks. Stock price recovered within days. No executive faced criminal charges. Not one person went to prison for facilitating transactions that helped cartels responsible for an estimated 100,000 deaths in Mexico alone. Pause on that for a moment. 100,000 deaths, enabled by a bank. And the consequence? A fine that barely registered on their quarterly report. Too big to jail. The Department of Justice explicitly worried that prosecuting HSBC could destabilize the global financial system. They introduced a phrase into our vocabulary that should make every citizen furious. Too big to jail. Not too big to fail. We already knew that one. Too big to jail means certain institutions and the people who run them exist in a separate category of citizenship. One where the consequences that apply to you and me simply don't apply to them. This isn't conspiracy theory speculation. Assistant Attorney General Lanny Breuer said it openly. Decisions at the highest levels of law enforcement explicitly prioritize systemic stability over equal application of justice. Fines as licensing fees. Here's where it gets perverse. Fines aren't punishments anymore. They're licensing fees. When a bank calculates whether to accept suspicious transactions from questionable clients, the math is straightforward. Potential revenue from looking the other way versus potential penalty if caught, multiplied by probability of getting caught, multiplied by probability the penalty gets enforced. When you run those numbers, crime pays. It pays extraordinarily well. Wachovia Bank processed $378 billion in transactions for Mexican currency exchange houses, that were essentially cartel fronts. When caught, they paid $160 million. That's 0.04% of the laundered amount, less than a rounding error. The executives who approved these relationships, who signed off on risk assessments, who collected bonuses tied to the revenue, they kept their jobs, their homes, their freedom. Meanwhile, a low-level drug dealer caught with a few $1,000s in cash faces mandatory minimum sentences that could erase decades of their life. Let that sink in. $378 billion laundered, $160 million fine, 0 executives in prison. This isn't a broken system. It's working exactly as designed for those who designed it. The psychology of participation. How do intelligent, educated people rationalize participation in systems they know cause harm? When you interview compliance officers and banking executives, not for attribution, of course, you hear consistent themes. Everyone assumes someone else is handling real oversight. Revenue is too important to question aggressively. Career advancement depends on not being the person who kills profitable client relationships. The decisions that enable money laundering aren't made in dramatic boardroom confrontations. They're made in small compromises, in questions not asked, in reports filed without genuine investigation, institutional inertia dressed up as professional competence. Deutsche Bank, the most revealing case. Over 2 decades, $18 billion in fines and settlements, including money laundering for Russian oligarchs through mirror trades, moving $10 billion out of Russia illegally. The scheme ran for years. Thousands of transactions. Coordination across multiple divisions and jurisdictions. When exposed, financial penalties, enhanced monitoring, individual accountability, virtually non-existent. Executives who presided over this period largely moved on, collected deferred compensation, faced no personal consequences proportional to what happened under their leadership. The revolving door regulators spend a few years in government service, then rotate into lucrative private sector positions at the very institutions they oversaw. The incentive problem is obvious. Why aggressively prosecute a bank where you hope to work in 3 years? Why push for penalties that might damage relationships with executives who control your future earning potential? The system isn't broken. It's working exactly as designed by those who benefit from the design. And that leads us to an even harder question, about geography itself. The money laundering infrastructure doesn't exist in some distant criminal underworld. It's concentrated in places we consider bastions of Western democracy and rule of law: the United States, the United Kingdom, their associated territories, quietly becoming the world's premier destinations for dirty money. The reasons why challenge everything we think we know about corruption and clean governance. What comes next might be the most uncomfortable part of this entire conversation. If you're feeling that sense of injustice rising, that frustration at a system that treats billion-dollar crimes as administrative matters, drop a comment. Too big to jail. Let me know this is landing. Everything we've discussed so far might feel like it exists in some parallel universe. Offshore accounts, shell companies, billion-dollar settlements. A world that doesn't touch your daily reality. But here's where this conversation takes a turn that might genuinely change how you see your own financial life. That coffee you bought this morning? The card you swiped ran through a payment network connected to the same banks we've been exposing. Your rent or mortgage payment, processed through institutions that have paid billions in money laundering fines. The grocery store, the gas station, your phone bill. Every transaction flows through channels that touch the infrastructure we've been discussing. The uncomfortable truth? You're not watching this system from the outside. You're inside it right now. Your money, your savings, your retirement. All of it flows through the same machinery we've been exposing. And that changes everything about how we have to think about solutions. Your retirement is invested in this. Let me start with something most people never consider. If you have a 401k or any retirement account, that money is almost certainly invested in index funds or ETFs that hold positions in every major financial institution we've discussed. JP Morgan, HSBC, Deutsche Bank, Wells Fargo. These aren't obscure companies hiding in shadows. They're core holdings in funds that manage trillions of dollars of ordinary people's savings. When you check your account balance and feel good about your financial progress, part of that growth comes from institutions that have paid billions in fines for facilitating money laundering. You didn't choose this connection. You probably didn't know it existed, but it's there, in your portfolio, right now. The network you can't escape. The interconnection goes deeper. Even if you avoid mega banks and use a smaller regional institution, that institution holds correspondent accounts with larger banks for international transactions. The global financial system is interconnected by design. Money doesn't stay in neat little boxes. It flows through networks that touch every major player. So when HSBC processes cartel money, when Deutsche Bank facilitates Russian oligarch schemes, the infrastructure they use is the same infrastructure that eventually handles your direct deposit, your mortgage payment, your credit card transactions. The connection isn't theoretical. It's woven into the fabric of your financial existence. Why you can't afford a house. But the connection that hits closest to home for most people. Real estate. If you've tried to buy a house in any major city over the past decade, you've felt the effects of money laundering without realizing the cause. Miami, New York, London, Vancouver, Sydney, Dubai. All of these markets have been significantly distorted by billions in dirty money seeking safe harbor. Here's how it works. A shell company pays cash, above asking price, for a luxury condo. That transaction ripples through the entire market. Comparable sales push up appraisals. Higher appraisals mean higher prices across the board. The couple trying to buy their first home suddenly finds themselves priced out, competing against anonymous LLCs funded by wealth that should never have existed in legitimate channels. The Treasury Department's geographic targeting orders revealed something stunning. In certain markets, over half of high-value real estate transactions involved shell companies rather than identifiable human buyers. Some of those purchases are legitimate privacy concerns, wealthy people who don't want their addresses public. But investigations have traced significant portions to foreign corruption, organized crime, sanctions evasion. Your rent is higher because of this. Your mortgage is larger because of this. The down payment you're struggling to save keeps growing because dirty money has inflated property values beyond what legitimate income can support. Tax havens in your backyard. Here's where it gets even more uncomfortable. Tax havens aren't just Caribbean islands with palm trees. Delaware is consistently ranked among the world's most secretive jurisdictions for corporate formation. You can create an anonymous LLC there with less documentation than you need to get a library card. Nevada, Wyoming, same opacity. American states, operating as domestic tax havens, enabling global concealment of wealth. When corporations use these structures to minimize taxes, the revenue shortfall doesn't disappear. It gets shifted onto you. Every road not repaired, every school underfunded, every social program cut. Some portion of those decisions trace back to wealth hidden through structures that couldn't exist without active choices by legislators and regulators. The jurisdictions aren't accidents. The international havens most people assume are independent bad actors. They're not independent at all. The Cayman Islands operate under British oversight. Jersey and Guernsey are British Crown dependencies. These jurisdictions don't exist in defiance of wealthy nations. They exist because wealthy nations created them, maintain them, and benefit from them. American and British banks hold accounts there, process transactions through them, profit from the secrecy. The decision makers who could shut down these havens tomorrow, same people whose largest campaign donors and business partners use them. The system isn't broken. It's designed to function exactly this way. There's no exit. What makes this particularly difficult to process? The realization that there's no individual escape. You can't opt out. You can move your checking account to a credit union, genuinely better, but your retirement savings still flow through megabanks. You can research every company you invest in, but supply chains and financial relationships are deliberately opaque. You can pay higher prices for ethical products, but manufacturers still use the same banking infrastructure. The feeling of powerlessness isn't imagined. It's engineered. The system captures everyone by making alternatives either impossible or prohibitively costly to pursue consistently. But here's what matters. This isn't about guilt or paralysis. Understanding your position within the system is the first step toward demanding something different. When people tell you global finance is too complicated for ordinary citizens to understand, that's a narrative designed to protect the status quo. You're capable of understanding exactly what's happening. The complexity is real, but not incomprehensible. The people running these schemes aren't geniuses beyond questioning. They're people who learned that if you make something confusing enough, most observers stop trying to figure it out. Your willingness to keep following this? It already separates you from the majority who accept complexity as an excuse for disengagement. And that leads to an obvious question. If we can identify these problems so clearly, why do they persist? The answer involves something rarely discussed in public: the actual people who work at the heart of these institutions. Whistleblowers who've risked everything to expose what they witnessed from the inside. Their stories reveal not just how the machine functions, but what happens to those who try to stop it. Those revelations should terrify anyone who believes individual courage is enough to defeat institutional corruption. If this is connecting to your own experience, if you felt that frustration of playing by rules that seem designed to benefit someone else, leave a comment. I'm inside it too. Let me know you're tracking with this. Everything we've explored brings us to a conclusion most people spend their entire lives avoiding. Not because they can't understand it, because understanding it requires abandoning comfortable assumptions about how the world works. Here's what you've probably already sensed but couldn't quite articulate. The greatest illusion of the 21st century is the belief that a clear boundary separates the legal economy from organized crime. That line doesn't exist. What we call the global financial system is, in large part, an institutionalized money laundering operation, legalized, legitimized, and protected by the same governments that claim to fight corruption. That's not hyperbole. It's observable reality, backed by decades of evidence, thousands of pages of leaked documents, billions in settlements that never resulted in meaningful punishment. The absorption, the narrative we're conditioned to accept. Criminals operate in shadows while legitimate institutions follow rules. The reality is far more disturbing. The business model that made organized crime successful wasn't defeated by modern finance. It was absorbed, refined, scaled to dimensions that would make traditional crime families look like amateur operations. Consider what traditional organized crime actually needed. 1. Methods to move money without detection. 2. Protection from law enforcement. 3. Hierarchical structures insulating leadership from consequences. 4. A culture prioritizing profit above everything. Now consider what modern financial institutions have achieved. 1. They move trillions through structures designed to obscure ownership. 2. They employ lobbyists who write the regulations meant to constrain them. 3. Their executives face consequences so rarely that prosecution has become theoretical. 4. Their earnings calls make explicit that shareholder returns override every other value. The transformation is complete. We just can't see it, because we've accepted a false distinction that serves institutional interests. The vocabulary trick. When a drug cartel launders money, we call it organized crime. When a bank launders the same money and pays a fine representing a fraction of profits, we call it regulatory compliance. The action is identical. The impact on society is identical. But the vocabulary creates artificial separation. It prevents us from recognizing what's actually happening. The design, not the failure. Insiders describe the same pattern, again and again. Banks don't accidentally process criminal money. They build systems optimized for plausible deniability. Compliance departments exist to create paper trails for regulatory inquiries, not to stop illicit flows. When problems become too obvious, institutions negotiate penalties that amount to licensing fees for continued misconduct. The calculation is explicit. Profit from processing questionable funds exceeds the cost of occasional fines. That's not a system failure. That's the system functioning as designed. Why this contradicts everything you were taught from childhood? We absorb a simple framework. Hard work and rule following lead to success. Crime leads to punishment. At the individual level, that framework holds. If you or I committed the offenses documented in these scandals, we'd face decades in prison. But institutions operate under different rules. Scale makes prosecution complex. Political connections make enforcement career-limiting for regulators. Economic importance makes politicians hesitant to impose real consequences. Every barrier to accountability was deliberately constructed by people who understood exactly what they were building. The distinction that determines everything. Here's the intellectual shift this requires. We're not dealing with corruption within an otherwise functional system. We're dealing with a system where corruption is foundational, not exceptional. Foundational. Why does this distinction matter? If corruption is a bug, an unfortunate deviation, then better enforcement can fix it. If corruption is a feature, an intended outcome, then enforcement will always be captured and neutralized. The evidence overwhelmingly supports the second interpretation. Every major regulatory reform of the past 50 years has been followed by documented continuation of the same misconduct, just through slightly modified methods. Invisible power. Traditional power was visible. Kings, armies, territorial control. Modern power is largely invisible. Capital flows, corporate structures, regulatory capture. The decisions that most affect your life are made in boardrooms you'll never enter, by people whose names you'll never know, through mechanisms you were never taught to understand. That's not conspiracy. It's just how complex systems concentrate advantage. The people benefiting don't need secret meetings. They share class interests, social networks, and professional incentives that naturally align their actions, without explicit coordination. Clarity, not cynicism. Understanding this doesn't require abandoning hope. Clarity about how things work is the prerequisite for meaningful change. The belief that keeps people passive isn't ignorance. It's comfortable illusion. Believing the system is fundamentally just, with occasional bad actors who get caught. That allows us to avoid the harder work of imagining something different. But that belief doesn't survive contact with evidence. The settlements, the whistleblower testimonies, the leaked documents, the regulatory failures, all of it points toward the same conclusion. What we call legitimate finance and what we call organized crime share more operational DNA than our vocabulary suggests. And understanding the problem creates an obligation to consider what might actually change it, not superficial reforms announced to fanfare before being quietly defanged, not individual choices that make us feel better while leaving structures intact. Real transformation, the kind that would actually threaten interests currently protected by this architecture. That conversation requires honesty about what we're up against and what genuine resistance would demand from all of us. If this reframing resonates with how you've been starting to see things, drop a comment. The line never existed. I want to know if this is landing the way I think it should. If you made it this far, you're not the kind of person who scrolls past difficult truths looking for something easier. That says something about you, and honestly, that's exactly who this channel exists for. The ability to sit with uncomfortable evidence long enough to actually understand what you're seeing. That's increasingly rare. I don't take it for granted that you chose to spend this time here. So if this content genuinely shifted something in how you see the world, not because I told you to feel that way, but because the evidence we walked through together actually landed, subscribing is just a way of saying you want more of this. More depth, more clarity, more of what mainstream conversations consistently avoid. That's what I'm building here, and having you along makes it worth continuing. Drop a comment. The illusion is over. I read these. Knowing who's actually tracking with the full picture helps me understand what directions to take next. And there's something powerful about marking the moment when your understanding of something fundamental actually changes. Let that comment be your marker. If you felt that connection throughout this video, that sense of someone finally saying what you've been sensing but couldn't articulate, leave a like. It's a small thing, but it tells the algorithm that this kind of content deserves to reach more people who are ready for it. Now, there's a video right here that takes everything we just explored and pushes it even further. If you want to keep this momentum going, if you want to see where this thread leads next, click through. I'll meet you in that one.